All right, well, elsewhere in tech, Tesla shares are down a bit, just slightly now, after the electric automaker, I should say, posted fourth quarter earnings, falling short of Wall Street's expectations. This coming after CEO Elon Musk announced the company's chief financial officer will be retiring after working at the company for 10 years. Joining us is the CEO and co-founder of Gerber Kawasaki Wealth Investment Management, Ross Gerber. Ross, I want to get your thoughts on Tesla's quarter, both in that, it was a second consecutive profit. Of course, profit was a little bit below where analysts were expecting, but the CFO news really seemed to be the piece moving the stock.
Yeah, obviously we don't want to see executive turnover, but in this case, the CFO had come back to really help Tesla get to this level, and last year was an incredibly long and stressful year, I'm sure inside Tesla as well as for shareholders. And so he's, beginning of the year, he's going to let some, young talent take over and retire again. And if you were on the call, you could hear it was a very positive thing. It's a very normal thing in business. I think because it's Tesla, it's hypersensitive of everything. But this was not a guy who was fired or failed in any way or some issue with Tesla.
And we've also seen, I guess, the reaction there was briefly negative, at least right when he mentioned it on the earnings call, and we've seen the shares now break into positive territory there. So, I mean, the market clearly reacting to that, but also want to get your take on, a lot of questions were asked about that March 1st debt payment that's looming, almost $1 billion that Tesla might have to pay in cash. And they mentioned on the earnings call that they're fine in terms of their cash positioning. What do you make about that and the questions surrounding their cash position?
Yeah, I mean, they're gaining a lot of cash every quarter now in their operations because they're a profitable company now. And so this is a new Tesla, and it's very important for people to really reanalyze the way they're looking at Tesla now as a profitable business. So, obviously, we would prefer them to be able to convert some of that into stock just from the sake of a capital perspective, but they can afford to pay off this debt, and there's a lot of benefits to paying down their debt. As far as increasing their financial flexibility and their financial position. So I'm happy with them paying down debt. I think it's a great thing. This is more proof that the business plan is working, and Tesla's in a whole new stage now than where they were a year ago. That's for sure.
Ross, I'd be remiss if I let you go without asking about Facebook's blowout quarter. I know you watch the tech space quite closely. But yeah, we're seeing those shares rally today in a blowout quarter. I mean, how surprising is it to you in terms of looking at those earnings there from Facebook after all the privacy concerns we've discussed?
Well, we weren't really concerned about the short-term effect on Facebook's advertising business because, there's kind of two ponies in this race. It's Google and Facebook. So as advertisers, we've cut back a certain amount on our Facebook advertising, but you still got to use it, and there's no way around it. And certainly in other businesses, Instagram's been, pretty beneficial from an advertising perspective. So they still have that business. I still think if you look at the numbers, social media's peaked. They're not really growing users anymore, maybe in Europe, but not here in the United States. But what they're doing now is monetizing that base. And so I think that's great. But, we've sold off a majority of our Facebook stock at higher prices. And we still think we're going to see regulators coming in. We're going to see fines. We're going to see a lot of things still with Facebook that are problematic. And so even though this is a nice rally off of an incredibly cheap price, in reality, Facebook's PE is still pretty low relative to Google and Microsoft. And, I think that reflects the uncertainty, especially from the regulatory side. Facebook's an interesting company to watch right now. I think long term they're going to still be here any way you look at it and still be a very profitable business. Morally, I have some issues owning the stock. Not that that's the most important thing per se for investors, but I just there's a lot of things about them that make me want to puke too.
There's a lot there, and I'm sure the privacy concerns, until it's addressed, and of course regulation being a potential solution there, we'll have to wait and see. All right, Ross Gerber, thanks so much for joining us. Appreciate it.
Thank you for having me.